Wow, 2025. What a year for the stock market, right? We're talking staggering, record-breaking highs. But you really can't let those final numbers fool you. The journey to get there was an absolute roller coaster of fear, volatility, and one overwhelmingly powerful force. So let's break down how the market climbed its wall of worry to reach the top.
Okay, let's just start with the big number, the one everyone's talking about. The S&P 500 clocked a massive 17% gain. Now that's impressive all on its own, but get this, it's also the third straight year of huge returns, coming after gains of over 20% in each of the two previous years. We are truly in the middle of a historic bull run.
And that powerful rally, it pushed the S&P 500 to the very brink of a major milestone. I mean, it came this close to touching the 7,000 mark for the first time ever, a truly mind-boggling level.
And hey, this wasn't just a handful of stocks doing all the heavy lifting. Nope, the Dow Jones Industrial Average was also shattering its own records, surging right past 48,000. Across the board, all the major indices were hitting new all-time highs.
You know, the party wasn't just in the stock market either. We saw other assets just take off. I mean, look at Bitcoin. It soared above $120,000 at its peak. This was what you'd call a classic risk-on environment, where money was just pouring into nearly every corner of the market.
So you see these incredible numbers, and you have to ask, right? What was the engine behind all this? What powerful forces were really at play here?
Well, it really boiled down to four key things that propelled the markets forward. First up, energy costs actually fell, with oil dropping to its lowest levels since the pandemic. Second, interest rates kept up their gentle decline. Third, inflation. Well, it was still a pain point for consumers' wallets, but it finally looked like it was stabilizing. And then there was the fourth one, the big one, the AI boom.
And yeah, while all those other factors were definitely important, let's be real. There was one theme that truly dominated the entire narrative and, more importantly, the numbers in 2025, the massive build-out of artificial intelligence.
So just how big was the AI effect? Well, get this. According to Fidelity Research, AI was responsible for driving roughly 60% of all GDP growth through huge spending on infrastructure and massive productivity gains. Let that sink in for a second. A single technological revolution accounted for more than half of the entire country's economic expansion. That's just wild.
And you can see that impact clear as day when you look at how the different sectors performed. For the third year in a row, the sectors right at the heart of the AI story, we're talking communication services and technology, they just left everyone else in the dust, gaining 33% and 24%. I mean, they were in a league of their own.
But here's the twist in the story. These massive gains, they didn't come in a straight line, not even close. The market had to overcome some serious hurdles. A classic case of what traders call climbing the wall of worry. Okay, this chart right here, this tells the entire dramatic story of 2025. Yeah, the final outcome on the right is positive, but the path to get there was anything but smooth. This visual just perfectly captures that tension, you know? That constant fight between the market's underlying momentum and the constant barrage of bad news it had to absorb.
I mean, just look at the volatility here. Early in the year, we saw dips caused by new tariff announcements. Then came the spring. Whoa, a dramatic 21% plunge that had a lot of people convinced the bull market was over. Later, we had scares from a government shutdown and concerns that companies were overspending on AI capital expenditures, or CAPEX. Each of these drops represents a moment of real fear for investors.
And yet, despite all that turbulence, all that fear, look at where the index finished, up over 17%. The market absorbed every single one of those blows and just kept on climbing. That is the very definition of a resilient market. It shook off its fears and focused on those fundamental drivers we were just talking about.
So, after a year like that, the natural question is, what happens next? Can this powerful momentum carry over into 2026? Or are the risks finally going to catch up to us? Let's look at the arguments.
Looking ahead, there are really compelling arguments on both sides. The bulls, they're pointing to pure momentum, with markets near all-time highs and the AI spending boom set to continue. They also see these powerful themes in areas like new weight loss drugs and high demand for industrial metals. But the bear case is just as strong. Consumer sentiment is plunging, the labor market's weakening, and consumer debt is at record level. And history adds another layer of tension here. A four-peat, or 4 consecutive positive years for the S&P 500, is incredibly rare. Since World War II, it has only happened twice. So history kind of suggests the odds are stacked against another big up year.
The crucial point is this. As Jurian Timmer from Fidelity puts it,
All the factors have added up to a resilient market. That was the defining characteristic of 2025. The big question for 2026 is whether that resilience can hold in the face of these growing headwinds.
So what does all this mean for an investor trying to navigate this complex environment? What's the key lesson from such an unusual year?
Well, the big takeaway is this. In a market with so many powerful crosscurrents, a booming AI sector on one hand and a very worried consumer on the other, the smartest strategy is to just remain diversified and balanced. The unusual nature of 2025 is a powerful reminder that putting all your eggs in one basket is a risky bet.
And that leaves us with this central question for the year ahead. After this incredible 3-year run, will the sheer force of momentum and innovation continue to push stocks to new heights? Or are the cracks we're seeing, the consumer debt, the weak sentiment, are they signs that the wall of worry is about to get much taller?